Yes, of course, we're going to talk about also how to find before it's too late, of course. Before we get started, I wanted to cover the uh, disclaimer. Please understand the presentation here is primarily focused on education purposes only, not to solicit any offer to buy or sell any investment products or any instruments. Also, please understand the CFTC rule 4.41, which clearly states that all the hypothetical and simulated performance results from the past is not the actual um, representation of the future. Do not, all information is based on one, cannot guarantee anything in future. Although we can understand, run the simulation, everything based on the past to see the probability, that's for sure. But please understand the risk involved. Trading is risky. You could potentially lose your money invested in there. Take a screenshot. Please understand the risk involved. Also, please note down our contact information. The website is buysideglobal.com. If you have any questions, anything in terms of product strategy, anything that you wanted to reach out to us, best way is always email. We will respond back all the emails within a day, if not next day. If you have something really important, you can always reach out, call directly the number on the screen, 435-659-8581 during Eastern Standard business hours. Although I'm in Chicago, so I'm in Central Time Zone. What are we going to cover today? We're going to talk about purely on the choppy trading session, and I wanted to make sure why it's important. Why it's important and how to trade those session. Starting with how to find when it's starting, and we also need to understand to learn how to make sure it's coming to the end so that the trend is going to start. It's as long as we understand how to find the beginning and the end, once you understand that part, everything is going to fall in place. How we can leverage, how we can exploit it by trading those sessions. That's it's I'm going to talk about a few things, but that is the most, if one thing you're going to take away from the session, how to find the beginning and end of the trading session. Once you master that, I think there's a lot of things you can leverage, you can trade over. So not only the beginning and end, I want you to learn what is the price boundaries. Chop in the sense market moves sideways. So you need to know what are the top and the bottom boundaries the session is going to stay under, contained under. This way you can use a lot of ways to trade, including the breakouts or bounds or whatever it is. Not only you need to know the beginning and end, also you need to know the price boundaries. Once you know those two critical concepts on the choppy session, then you can decide on how we can trade, when to trade and when not to trade, what setups you can trade, what setups you can avoid. We're going to cover a couple of trading strategies that we use manually as well as in our trading bot, because everything that we're going to talk about, we tested plenty of times in the trading bot to automate as well. So we'll go through those in detail. Of course, we're going to finish with today's session with a special offer so that you can get started right away, the strategy that we are going to talk about in detail today. Believe it or not, 80 to 80% of the every day or like all the time is the choppy session. Here and there, you're going to find the trending. I think most of the traders focus on, I want to find the entry where the market is trending and then go from there. But the problem is 80% of the time, the market is going to be choppy. When I say 80%, I'm not talking about the days. Today is choppy, tomorrow is going to be, I'm talking about within a day. Within a day, even the market is trending, is going to be find the blocks of choppy markets in the way. The reason you need to understand how to find, how to trade those choppy is because most of your trading losses are from trading sessions. When the market is trending, everybody can make money, but you are going to lose money most likely on the choppy session, right? I think unless you master those regions, how to detect, how to use it, how to find the end of the session, it's gonna be a really hard time. That's why please understand that most of your losses is going to come from the Choppy Session. That's why you need to master that before learning the trending or trend-based trading strategies. It's the same thing that I just mentioned. All the new traders focus on, I'm going to find the entry using some magic indicator. Once I enter long or something, market to go up, shoot up, I'm looking for only the trades where I can enter the only trending market. But most of the time, you need to focus on the risk management, where when not to trade, what are the ways you can lose money, avoid those losing side. That's why learning the choppy session is important for you to understand before going for long shots. Market, if you look at the market every day, or dailies or weeklies or monthly, doesn't matter. Market does not trend up or down every day, but every day you will see either the block of choppy session or the full day choppy session. It's going to find the choppiness. Like I said, 80% of the time. It's not just, I'm not talking about 80% of the day, 80% of the whole week or a month. You're going to find it. Even on a trending day, there'll be blocks of time, there'll be a choppy sessions. That's when you hit your roadblock. That'll test your emotions, test your trading strategy, everything. That's why you need to understand um, why it's happening, and how you can use it. One of the key reasons that we're going to use today is using supply and demand. The choppy session is always formed because of the supply and demand zones and regions. We're going to go through a little bit in detail, but once you understand supply and demand, not only you can trade on, you can detect it, trade it. Also, that's also going to give you the clear indication of the trend is about to begin, trend is about to end. Both ways is going to be very, very helpful in terms of um, supply and demand. So let's talk about like trending days, because I know when the market is choppy, it's a different story. But even on the trending day, market does not go in a straight line. Why? Because every time there is a big movement, there will be a pause. There will be a pause. That's what we call it as in the supply and demand world. When there's a market is trending up, it's going to pass for a distribution. What is distribution? We covered that in depth in the previous webinar. If you wanted to know, please watch our webinars in our YouTube channel. I don't want to take too much time today, but understand that even the market is trending up, there will be a pause, distribution, and then either market reverse or market continues on the upside. Always there will be a distribution or accumulation. Those two regions we call it as choppiness, right? Once the market goes up, that's when the distribution or accumulation, those regions are, are generally called as choppy region. So let's look at, this is May 2nd. If you go back, it's very easy to say in the diagram, but let's look at the real market in terms of how does it work in terms of real market chart. This is May 2nd on a chart. You can see every trending market. Also, there will be a period where market gets choppy, goes sideways, and then decide which route it's going to take. So you need to know when the choppiness starts, wait till the end, and then decide based on how it breaks out, which side you want to take your trade. Finding those regions are very, very important. This is May 2nd. You can see two regions where the market found the price range, it bouncing back and forth, did not move at all. Let's look at a couple more days so that you can understand both ways. Here you can see in terms of when the I see in terms of three chopping blocks, in terms of when it found the range of price, it bounced between those areas until it breaks out from those regions. I'm going to talk about breakout in detail so that you can find and then trade. I just want to show you examples in terms of when you see in a naked eye on the chart, you won't realize the concept of trending up, trending down, going into distribution zone, accumulation zone. It's very hard to see those things, but you need to know how these things play out in a real market. I wanted to show you in terms of these regions. I'm also going to show you with the indicators, with the help of other indicators, how to start detecting as early as possible so that you can trade on it. Again, so this is 20th April. When the market moves up, it stays there for a long time, and then market moves in a different direction. Okay, let's take a couple more examples here. This is, look at this. This is the April 27th. It's one way trending all the way up. Even those days, it does not go in a straight line. You need to know when the market goes in a straight line, you need to know when the market goes sideways for a short period of time. There will be always a distribution accumulation layer. You need to understand those regions, how to find those regions. Why? Those regions, we need to know when it starts, when it ends, and also end of those region is going to dictate whether it's going to continue or like a reverse based on which way it's going to break out, which way it's going to break out. So I just want to show you this particular example where market is going one way. If I remove those blocks here, you can see just trending up. I can enter anywhere. No, you cannot. If you're going to enter long, you need to know where you can enter. If you're going to enter in the wrong period, you're going to get stopped out. You're going to get stopped out for sure. That's why you need to know when you can enter, wait for the perfect timing to the enter long trade. Yes, the market is trending up, but unless you understand those accumulation distribution layer, even though the market is trending, even though whole market is going up, based on where you are entering, you are going to get stopped out. Like I mentioned, knowing those choppy regions is going to help you to avoid, I don't want to say avoid losses, because as per safety, I should not be guaranteeing anything, but it'll have better risk management, better confidence, better winning rates based on when you can enter based on certain confirmations, if that helps. Again, this is 26th April market. This goes both ways. When the market goes up, it stays there, reversed, stays there, and the going up. You need to know those regions to how to leverage it perfectly. Okay. Now we looked at the charts instead of the naked chart. I wanted to highlight those regions in the last 1 week. It's easier. It's easier to identify the choppy regions in the proper tools. We're going to use supply and demand, not only to find those regions, also to find the price boundaries. The price boundaries are very critical for your trading strategy. We're going to cover those things. I want to learn two things: how to find the choppy block, beginning and the end. Also, what is the price boundaries, the top and bottom, to stay away or to trade. Those two knowledge is going to help you with the trading strategy that I'm going to cover today. Any questions so far? Anyone? Anything? All right, I'm going to continue, hopefully. So before I'm getting to the supply and demand indicator and show you how to trade it, I just want to go through very quickly on what is supply zone. Supply zone is a price range where the momentum of either the when the market is going short, when it hits a certain price level, market tend to reverse. The reason, that's the price the large amount of traders are waiting to acquire for long. That's called demand zone. Opposite is true. When the market it reaches certain price level, it pushes pushing it down, where the high interest of selling, that's called supply zone. Just to understand, supply demand zone is where more traders are willing to buy. Supply zone is the price range where more traders are willing to sell. Now we can understand in terms of when the price movement happens, trending up. Once it reaches the region where a lot of traders wanted to uh, looking for the sell trade, then its distribution happens reverse way around. How can you check it out? If you can attach your supply and demand indicator, doesn't matter it's ours or any other products, as long as you have the effective supply and demand indicator, you can find out in terms of trend is identified by, we covered in previous webinars, but just to reiterate, trend is identified by when the new demand zones are keep on. Can you see my mouse movement? Just want to make sure. Can you guys see my mouse? So that I can point out where I'm looking at right now. If you can type yes or no, where I can show my mouse. Okay. All right. So every time there's a demand zone formed and extended, not getting tested, continuously new demand forms, that's trending up. Same way, opposite side, when the supply zones are keep on interrupted, broken through, that's a confirmation on the trending up. When the market enters, both the top supply zone is extended, when the bottom demand zone extended to form a rectangle, that is when you can find out the boundary, the top boundary of top is identified the extended supply zone, bottom is identified by the extended demand zone. This is the boundary where market is going to bounce in between. Of course, there will be smaller demands and supply zone formed in between, but those are will start and stop, will start and stop. But you need to look for the boundary where supply get extended continuously, demand get extended continuously, where the price goes, come to the demand, bounce back up, come to the demand, bounce back up. That means this is the bottom of the choppy region. Once you can see those boundaries formed, that is the confirmation on the choppiness session is starting. Okay, now we looked at the days, couple of each day in naked chart on those choppy regions. Now, same thing, let's look at in terms of supply and demand perspective. You can see here, it is clearly marked the top region. It's extended like a box, top and bottom, where here, in terms of, we can see extended, there's nothing here. As long as you can see the top boundaries by top by supply, bottom for the demand, extended until it breaks out at one point. Until that region is your choppy region. Any question? This is something you need to understand. You have to see the rectangle formation. Rectangle in the sense bottom by the demand, top by supply, keep on extending. The price stays in between, bouncing back and forth within those regions. Those are the boundaries you need to understand. Until it breaks out, the price is going to stay in there. Okay. Hopefully there's no questions. Same way, let's look at May 1st. In terms of once it started here, you can see the demand is continuously extended. It's not even broken through. It came down, touched, went up. At the same time, the supply formed on the top, it never get interrupted. That means almost from 11:30 to 1:30. You can see the time frame at the bottom. 11:30 to 1:30. This is Central Time because I'm in Chicago. You can see the price just stays in between. That is the boundary. That is the choppy session I'm talking about. What do you need to look for? The breakout from there until either the top boundary or bottom boundary is broken through. That is the price boundary I'm talking about. That is choppy session is gonna continue. Same way you can see three different choppy sessions happened on May 1st. Let's look at a couple of more days. This is April 28th. April 28th, you can see it from 11 a.m. until again almost like a 1:32. The rectangle formed, the demand keep on extending, it was not broken through, and then on top supply was continuation, and then the next one. As long as you understand how to identify, here I'm marked in the diagram, but in a real chart, all you will see the extension of demand, extension of supply. You need to know the top and bottom boundaries. Okay, this is the trending day we talked about. Even on the trending day, you can see the price started bouncing on those extended supply, extended demand until it breaks out to the next level, until it breaks out, until it breaks out. Okay, the key is to find out the extended supply, extended demand. That's all I'm trying to convey here with a lot of examples here. Again, one more on the 26th of April, you can see in terms of the extended on supply, it did not, it touched, it did not, it continued again, same way in the bottom there. Let's look at. All right. So now we looked at in terms of how to identify those choppy sessions irrespective of the market, whether the market is trending or the market is going sideways. As long as you have supply and demand indicator on, you look for the boundaries, extended supply, extended demand on the bottom, keep on extending, price is bouncing those things. Now you know how to find it, how it's starting, how it's ending. Now the next question is really how to trade it. Let me give you two trading strategies that you can. This is not new. I think this is a lot of people use on those strategies, but the indicator helps in terms of to see it visually, to see it in your eyes. It's happening in real time, how it's forming, how it's coming to the end. Okay. First one we talked about. You have to look for the top extension zone extended for the top boundary and the bottom demand zone extended for the bottom boundary. You keep on watching those things, let it extend, let it extend. Okay, we're going to talk about the breakout strategy. So that means we're not going, in this strategy, we're not going to trade while the choppy session. We're going to trade and wait for that choppy session is going to come to the end. As long as both top and bottom zones are extended, we're not going to trade. In this case, we're going to wait till the price breaks out. Okay, wait till the price breaks out of those region. Once the price breaks out either on top or bottom, that particular zone is going to stop. You can see in terms of, let me go back one more time. You can see in terms of once the price continues here, once its price cross those things, that demand is going to stop printing. It's not going to extend anymore. That means it's broken through. Just because it's broken through, can you enter the trade? No, no. That's where a lot of people make the mistake. Just because the price breaks out of the demand zone, don't blindly enter. That's when you lose your trade. Okay, in that case, when can I enter if the price breaks out? You need a confirmation. We're going to talk about a couple of confirmations. First one, once, let's say the price breaks out of the top supply zone. That means it's going up beyond the top supply zone. It breaks above the supply zone. Once the price breaks above the supply zone, don't enter right away. Wait till the new demand forms above the supply. What do I mean by that? Let's try to look at the example. Okay, right here, this is the best example. In terms of here, you can see my mouse right here? I just want to make sure I didn't get the answer before. Can you see my mouse? Okay. Once you see the top supply and the top bottom demand, price is bouncing, you can see right here the price bounced, price broken through the supply. Just because it's broken through, I can't enter. You should not be entering here. Why? Market could reverse. That is something people should always aware of, the liquidity sweeping. I don't want to get to the topic, but in short, don't enter just because price breaks out. Okay, when can I enter? You need to wait till the next demand. See the green demand that formed, the edge of the demand is above the supply that you just broke out. This demand should be formed after. If you don't see the demand formed above the supply zone, it's a fake breakout. Please don't enter. Please don't enter on those things. In this case, the price went up, formed a supply, might be reversing, but the demand formed here. This top edge is above the supply top edge. That means this is the confirmation that you can enter long. Then you can go. Same way here in terms of once you can see the demand forms above the top supply, you can enter. It goes undergone. Let me try to find example for this chart. Okay. Oh, this is a great example for false breakout. What did I mention? If the price breaks out of the demand, in this case, I can't go short here. Why? I need to see a supply below this top demand edge. Here, what happens? Once it breaks out, instead of getting a supply because I'm looking for a short, what happened? The demand forms. It reverses again. That's why I'm trying to reiterate, you do not trade as soon as it breaks out. Wait for the confirmation. What confirmation? When the price breaks out of demand, that means it's initial indication of the going short, but wait confirmation. Even though it breaks out below this demand, you need to see another supply zone formed right below this bottom level. Until that time, please don't enter. Okay. This is the best example in terms of why you should not enter. Let's look at, okay, here is the best example in terms of same thing. Price breaks out below this demand. Look at here. Not this one. This supply is above the demand. This is not the confirmation. The confirmations are right here. This confirmation, this supply is below this demand. This is where you can enter. This is where you can enter going for a short. Okay. Again, look at this one, the false alarm right there. The price broke below the demand. If you enter the short right here, what will happen? You're gonna fail because the zone formed below the demand was another demand. It goes back above. So, any questions so far in terms of how we can trade the breakout on supply and demand based on choppy trading session using supply and demand indicator? Do you guys have any questions? Anything that I need to explain a little bit more before we go into the next strategy? Okay. All right. So, like I said, if the price breaks out, if you're going for a long, price need to break out of supply zone, goes above the top edge. You need to wait for a new demand zone formed above the rectangle to confirm the long signal. On the reverse, if the price breaks out below the demand zone, you need to wait new supply zone below the rectangle. Always use stop loss following the bottom of the for demand for long, top of the supply zone for stop loss. All right, so let's look at the next strategy that we can use. This strategy is not highly recommended, but it works on certain conditions. You need to know when exactly you can use it. We talked about in terms of what is choppy session. Choppy session in the sense is going to find the boundaries, top and bottom boundaries. The market is going to stay on those price ranges. It's going to bounce back and forth. That means, can I trade once hits the bottom boundary? If it's going to bounce, can I enter on the bounce? Yes, as long as there is few conditions. One, you need to have the larger price range. The price, when I say price range, the price difference between the top edge of this supply and the bottom edge of the demand should be very good height. If it is small height, I think it's not going to work out. In this, usually I look for 25 to 30 ticks on 1 minute chart on ES, so that I can find those we can bounce. And also within those boundaries, top and bottom boundaries, you need to see at least 3 to 4 smaller zones should be forming. Let me, like I said, today is the best example for that particular strategy. Look at this is today. This is today. I'm not sure whether you can see the price range here. I think from here almost like 460 bottom, 4090 in the top. That's like 30 points range. In this case, as long as you can scalp between those moves as long as once you reach the top. So if it is like a previous cases where the height of the price boundary is very, very small, this trading setup won't work at all. You need to make sure the price range of the choppiness should be very, very huge. Also, we need to see the smaller zones. What do you mean by smaller zones? Between those two edges, I can see multiple zones forming in between. That means I can get the confirmation. Bounce, confirmation, enter. Bounce, confirmation, enter. That's what I'm talking about. When it comes down, you can see the bounce, get the confirmation, enter on the confirmation. Okay. So we talked about both in terms of how we can trade on the bounce as well as the breakout, but always don't use just one indicator alone. You need a couple of more indicators that you can get the second confirmation from. That's why order flow zones indicator is one of the phenomenal indicator. Is going to show you the momentum based on order flow. It's going to color code the bars, the blue for like bullish, and then red for bearish, and yellow for choppiness. It's going to print out a better indication for the trend. This is on the 1 minute. This is on the 1 minute chart on ES, but I always have a 30-minute larger time frame to get the second confirmation. Same chart, same day, same instrument. I'm going to move to on order flow zones with the order flow zones on a 30-minute chart. Look at this one. All you can see here only 2 trades. Can you see it? This is the almost like a whole day. When I look through, um, when I get this signal, look at this one. All you can see before in the smaller time frame, you can see the back and forth of different colors. Once you move to the higher time frame, order flow zones, a phenomenal indicator that can give you order flow based momentum that you can rely on as a confirmation. You can see from here, I don't have the time frame unfortunately, but from morning to the afternoon, just one trade. And then other way around, once it bounces, other way around. If you look at the small time frame, it's very hard to see. The same trade, you need to look at for confirmation, higher time frame with order flow zones is a clear indication. Okay, so that's why our combination is like supply and demand and order flow zones is amazing combination where you can trade together with, as long as both indicators agrees on a different time level, that's a better winning probability. The reason I have the supply and demand also on the 30-minute time frame, because here the supply and demand zones are much more powerful than the lower time frame. Here I can get my confidence much higher when I enter the trade. I have supporting demand form for long or short that gives extra confirmation. That's why you need to have, I know you're going to trade with one time frame, but always have one more time frame in higher time frame to get your confirmation. Okay, I'm going to talk about one of the my favorite indicator here in terms of BG levels. There is no indicator in the market that can predict the targets for the day better than the levels. Even the supply and demand and then the order flow zones is going to tell you what's happening now, what's happening at the moment. But don't you want to know by the time you log in by 9:30 Eastern trading day, if I give you the target that's most likely to reach today, would you trade it? That's what he's going to do. This estimation happens, is going to print the target levels by the time you log in. Let's say you're logging in by like a 9:30 Eastern to trade. It's going to give you the clear target levels for the day. It's going to give you 2 targets, top and bottom. The reason is based on the momentum you can pick. If the momentum is towards the upside, the certainty of the target on the top side to reach is impeccable. I'm going to show you a few things in terms of this is the most successful target estimate indicator you can find anywhere. It's based on order flow primarily, but it does not look at current data. It looks at couple of days and weeks, and then to predict what's going to happen today. It's not once the target is set, by the time morning, the target is valid till end of day. It's not going to change the levels. Okay, and also it's going to, we also cut as price magnet. The reason is once the prices goes there, is going to, most of the time it's going to snap or it's going to bounce. I'm going to show you a few things in there. Okay, so in the chart, I have also printed the times here in terms of, I'm in Chicago, like I mentioned, this is for me, market opens at 8:30 Central Time. When the market enters here, I'm almost on the top, almost on the top. You can see, before I get there, do you guys know in a swimming races, if we are going for a swimming race, if they're taking multiple laps, when they go for finishing their lap, when they return on the edge of the lap, they turn and they touch and then go opposite direction. I don't know how they call it. Anyone from swimming side? If you are going towards finishing your lap, if you need to return, they turn, touching the target and reverse back. That's what I'm talking about here. How many times I'm going to show you a couple of days example. You're going to watch one thing. How many times the market is going to touch it and then reverse, touch it and then reverse. My point is, if I can give you the target, the market is going to reach very high likely, and then going to reverse immediately. Don't you want to trade it? Here's the best example. Market on 8:30 on my time, the price was on like a 40.98, 40.98, 8:30. By the time 8:30, we printed this target. This is the target for today. There's one more target on top. We print targets on both ends. The reason is that based on momentum, which side the market is going to have a momentum, is going to reach that side of the target. So in this case, you can see the market started at 498 by 8:30 Central. At that time itself, we print this target. What happens? Market went down, 9:30 touched, exactly barely touched, and then reversed. When momentum continued, came back, touched, and then reversed. I'm not sure you understand the power of the indicator right here. Let me go through a couple of more days so that you can understand a little bit better. Okay, so this is May 3rd. In terms of market started again at what price is this? 41.44. It went, touched the target, and then pulled back. And then where did it go again? Based on momentum again, it went, touched, and reversed, and stayed there, where the market finished on the bottom of the target. This is one of phenomenal indicator that you can trade. You should not be trading without in terms of the target levels. Okay, let's look at a couple of more days just to prove you in terms of how much effective. This is the May 1st. When the market opened, it was 41.82. It is 8:30. At the time itself, the indicator predicted that the levels on the top side, 4200, 41.76. What happens? By the time like 10 o'clock, it reached the target, pulled back, went back to the target, and then pulled back. The target is like most powerful. I call it price magnet because it snaps in there. Okay, let's look a couple of more. Look at this. This is April 28th. I think it's Friday. When the market started, we are all the way down, all the way down. So we have, we always say in terms of there are two levels, daily levels and the extended levels. Once the market reached that level, if the momentum continues, there's one more extended level on top of that one. Look what happened. Market started, it reached that level, tried to stay in there, it did not bounce. That means it's going to go beyond that level. It stayed in there, then went up, came back, touched it. Remember the swimming lap turn? This is a swimming lap turn, touched and reversed. Look, where did the day end? This is like 3 p.m. market close. Market close. Where did the market end? On our estimated target. This target was estimated, calculated by 8:30 in the morning Central Time. It's not, this prediction is not happening middle of the day. It happened right at the time of the market open. Okay, let's look at a couple of more days. Again, this is 27th of April. Again, you can see market started somewhere, went and stayed there. More and more it stays there. That means it's high likely to go even further, even further. I have a question. All these are 1 minute time frame, Gene. I think all the charts I'm having is 1 or 2 minute time frames. Again, this is April 27th. It reached the target, tried to stay in there, went to the next target. Okay, so this is on April 26th. Market started at 4100. We predicted that level 4080 even before it happened. What happened? Swimming left return, touched, reversed, and again went back, touched. When it's again, when I mentioned it stayed on the bouncing between those levels, that means it's going to go even further. Look, where did it end? It ended rightly, exactly on the extended level that we predicted. Okay. Again, this is 25th of April. In terms of market started at, I don't have the price line here, but it went to the target. Like I mentioned, the swimming lap return, touched, went back above, went back again, stay in there. Moment it stays in there, that means it's going to go even further. That's what happened. Okay, so any questions so far? I want you to understand the power of combination of working together with supply and demand, order flow zones, as well as the BG levels. These three are the must. As long as you have these three, you'll be able to, one, you can predict your choppiness in terms of when it's starting, when it's ending, how can you trade. If you can use the supply and demand order flow zones together with the momentum confirmation, you can either trade the breakout or trade the bounce on those things. But even when you are in the long trade or short trade, you need to know when you can exit. The high likeliest, one of the best estimation of the target to, I want to maximize the trade every single time. Best way is to know what is your target you're gonna reach, and then you should exit. Look at this. When I say like lap return, if you have the target right here, don't put on the exact purple line. A couple of ticks above. Sometimes it's not there. So if we have the target here, it's going to touch and return. You better exit on the target. That's why BG levels is a much more powerful indicator for your trading. Always use BG levels in terms of the target predictions. Okay, I think I'm almost end of the session, but I wanted to give some time. Do you guys have any questions? Anything that you have before go further? Okay, I want to show you something in the chart because I want to show. Don't forget that except the BG levels, all the algorithm we talked about, the trending based trading that we covered in the last webinar, the higher highs and higher lows, and then today we talked about the choppiness. Everything is automated in trading bot, supply and demand trading bot. I want you to learn to trade manually because automation is going to help a lot. But if you master those strategies manually using those indicators, you can maximize your trading success. That's why we wanted to give you what are the strategies, how it works, how we can trade, what you can avoid with those strategies. Also understand that those strategies also automated on the trading bot. That's why we wanted to offer you today the combination of the tools in terms of this. We talked about in terms of supply and demand indicator, order flow zones for the trading, for the stop loss automations, trading stop indicator. Also automate everything, test your strategies, scalping, trending, everything, trading what, it's completely automated over there. That's why today we wanted to offer you the full package. Don't worry about this price. This price is not for you guys today. You guys attending, you can access all the tools that we talked about today. Just because everything put together. If you go to the website right now, if you try to purchase the bot, it's 2499 per year. Each indicator is 495. Anyone who is purchasing today, not the full price of altogether for $4,500, just 495 down, 195 monthly. Who are purchasing today or tomorrow morning, we're going to give the BSG levels. Don't forget, BSG level is a phenomenal indicator that you should not trade without it. No one can predict the target beginning of the day. It's not going to give you signal in between the day. It's going to give the levels, targets when the day starts. When the day starts, it's going to give the target. Okay, I just went through all 7 days, the past 7 days, to show you the power of BSG levels and also supply and demand, also out of the zones. We wanted to give you the full package so that you can try not only the strategy that we discussed today, also the strategy that we discussed in last webinar. Last webinar, we talked about trading based on the trend, higher highs and higher lows. Today, we are doing the opposite. How can you trade the choppy session on the breakouts, on the bounce? Both are automated trading bot. All right, so I want you to learn trading manually so that you can automate it with instructions to the bot. Also, today and tomorrow, whoever's buying this package, we are going to give you BSG level indicator included in the subscription for free with no additional cost. So compared to the actual cost of the full price, 495 down, 100 monthly, it's a much better way. Think about it. If you cannot make 4 points monthly on these particular tools, there's no point in the strategy at all. The 4 points in a month is going to cover the cost of all the tools together. Think about this way. Just 4 points. Okay. So I want to show you a few things in terms of the scalping. We talked about scalping. I want to show you. Let's see. Okay. Can you see my chart today? How many of you can see my chart? This is today. This is today. I have the BSG trading bot attached to it. We talked about in terms of scalping, right? And also I mentioned that today is a great day to scalp. Look at this. I'm going to zoom it through. I think today is the end of day here. You can see in terms of the top boundary, I think extended supply and top. We talked about extended demand on the bottom. Within that, we have the movements. The whole range was around like what? 60 points. 60 point. That's a very good height to scalp. Look what happened. The bot was able to scalp every time there's a micro trends. You can see right there. You can see. I'm not sure you can see it or not. Here it's the market opens right here. Entry yellow dots are the break-even points. Yellow dots, you can see the trading bots break-even points. All the red dots, the trading bots stop loss trace. You can see how the bot was able to scalp in those regions. Okay. Sometimes the bot is a great. One thing I wanted you to understand. I don't want to learn the trading. I'm going to buy the bot. I want it to be a money-making machine. No, that's the bad way to look at it. If you are going to trade on a scalping, on a choppy session, or a trending day, there is no other tool to small adjustments to look at how you could enter, analyze those things, change your where you can keep your stop losses, analyze everything. You can automate the whole trading bot, but I want you to more you learn the strategies, small adjustments, how you're going to impact your trading using the bot, you can do a lot better. Let me look at the same bot a couple of days back. I'm going to look back at, let's say, not every day is great, but that's why I want to show you good and bad days. Okay. Again, look at this in terms of how it was scalping. When the market is going down, it's time to scalp in between the points. You can see that the red dots represents the successful trade. Green dots represent successful trades. Red means losing trade. Okay. Let's look at a couple of more days. I know, how many of you traded on May 2nd? How many of you traded on May 2nd? How many of you traded on May 2nd, the huge downside? No one? All right, so the reason I'm asking you is that we talked about the coming out of choppiness, right? The breakout. Look at the execution here. Do you see that breakout here? On the breakout, okay, let me zoom it up. On the breakout, you can see that extended from 8:39 to almost like 9 o'clock. The top supply was extended, bottom demand was extended. Once it's going down, there was a demand zone here. The bot didn't enter, but it waited for the confirmation for the supply below the demand zone. We just talked about when the bot entered, the market went down like crazy from there. Look at that. So here is what it tried to find the micro movements there, tried to enter long, it failed, then realized it was a choppy region. But when it's broken out, again enter the trades. These things never happen every day. Look at the simulated response for that one day. One day, it was able to utilize the strategy we talked about, the breakout from this choppy region, scalping, at the same time trying to enter the higher highs and higher lows. Not everything is going to be success in terms of here, the higher lows, those strategy here, those failed. But the breakouts, look at the breakouts happened here, long breakout, and short breakouts. Look at those. This is trend. This is from the last session we talked about. When the demand is, okay, let me expand that one. When the demands are forming, not interrupted, supplies are broken through, that's a confirmation for trending. So it was able to enter the trend and exit the trend based on those things. Okay. So this is trading bot, supply and demand, order flow zones. I also have this bot does not use levels, but I wanted to use it manually. Bot does not use levels. It uses order flow zones, primarily supply and demand indicator, also trailing stop. It uses those indicators. Okay, let me go back one more day. I'm showing only the good days, obviously, because this week is phenomenal in terms of how it went for. This is like you can see the range of market, extended demand on the bottom, extended supply on the top, scalping day. It did scalp. Can you see? It did scalping those as well. Okay. All right, let me go back to the slide again. Please use this URL. This offer is only valid on this particular. You can't find this link in the website. That's why I want to take a screenshot of this particular slide right now. Buysideglobal.com/bot monthly. You're gonna get the trading bot, supply and demand indicator, order flow zones indicator, trailing stop indicator, and the most important, if you're buying today, you're gonna get BST levels. Same offer if you buy on a Saturday or a Sunday or Monday, you're not gonna have BSG levels. The free inclusion of BSG levels is valid only for today and tomorrow. Okay, all the purchases happening today and tomorrow will get BSG levels, the phenomenal indicator that can predict the daily targets based on the momentum. Like I mentioned, you're gonna find a lot of swimming lap returns, touch the target and return. That's why I want you to have the full suite of all the products together. You can incorporate the strategies we talked about today and also strategies from the last session on the trending. Both will work out with these products. With that, I think that's the end of the presentation. If you guys have any questions, this is the last time I can take the questions. Anything there? Before you leave, take a screenshot of this slide. It has all the information. more important, the URL buysideglobal.com/bot monthly, which includes the trading bot, supply demand indicator, order flow zones indicator, trailing stop indicator, and then the magic indicator BSC levels. Okay, so that's all I have for today. Thank you for joining us. If you have any questions, anything, please reach out to us. Website, contact us. Hope you guys have a great day. Thank you. Thank you all.